effectively. But the third pillar of a third generation blockchain and what Cardano aspires to be, and probably one of the most important of the three pillars, is this idea of sustainability. And you could break sustainability into two components. First, there's the idea of how do we pay for things. So cryptocurrencies are not companies. Even if one is to say a cryptocurrency or a token is a security, it's still somewhat decentralized. It's still infrastructure. It's much more like roads. It's much more like TCP/IP. They're protocols. And so when you talk about a protocol that's open source, the idea is to minimize the operational cost of that protocol. So things like putting tolls on the protocol or intellectual property on the protocol, even if it's well intended, for example, to fund a foundation, are likely to be less competitive than completely open, completely free protocols. So as a consequence, it's very difficult to figure out exactly how one ought to maintain these systems, pay for these systems in the long term. So certain proposals such as a patronage type of model where a corporation decides to volunteer its developers may work in the short term, but the challenge is that those developers end up having a huge amount of influence over the evolution and growth of the system. So one can argue that a patronage model will lead to centralization of power into the hands of a few companies that want to modify the protocol in a certain direction. For example, right now, the W3C is having a large debate about bringing DRM into the browser. And we've already seen the EFF resign from the W3C because they feel that larger companies in that effort are influencing this process towards the benefit of large content distributors as opposed to a free and open web. So patronage may not be the best way. ICOs are also an interesting way, and they're like a quick jolt of energy. They provide a lot of capital, and if there's good governance behind that capital and good people behind the capital, certainly can result in the creation of a great product, a great protocol. But the problem is that an ICO isn't an indefinite event or a continuous funding event. Rather, it's a large flood of money in the very beginning to do something. But no matter how large that pile of money is, it's finite and will eventually run out. So the first thing is, can we construct a system that has a treasury? A treasury is where a blockchain is able to print money and put some of that money into a decentralized bank account. And that decentralized bank account is funded through inflation. So the first to pioneer this model was Dash. If you look at Bitcoin, every time a block is produced, it started with 50 coins per every block, and then it decreased by a factor of 2 every 4 years, and now we're down to 12 and a half. All of that goes to the miner. With the Dash model, instead of having all of it go to the miner, some of it actually goes into this decentralized bank account. Then there is a democratic method to vote on funding proposals. So what Bob can do is Bob can submit a ballot to the Treasury. And then the token holders can vote. And if there's a high enough threshold, if there's a high enough amount of voting, Bob's ballot will be approved and the Treasury will open up and pay Bob. So this abstract model is actually incredibly robust because it has a way of being refilled on a continuous basis. It's directly proportional to the overall influence and size of the currency. So as the currency grows, it has more and more resources available, which in turn can be spent to grow the currency. So there's a positive feedback loop. And also it has a democratic process, a democratic participation connected to the system that allows the stakeholders in the system to start having discussions about priorities, namely what ballots ought to be funded. For example, Bob can say, I'm a developer and I want to sustain the system, and submit a ballot. And then Alice can say, I'm a marketer and I want to market the system and create content and videos. And now the token holders get to choose what do they think is a higher priority. further development or marketing. Or perhaps a scientist wants to write a new protocol to improve the existing protocol. Maybe it's a new privacy primitive, for example. Or maybe it's a bit more security with the network stack or a bit more anonymity with the network stack. So instead of going to the National Science Foundation or the European Union and trying to get a traditional research grant, scientists of the future may even be able to use the Treasury model to propose funding for research. Or perhaps you're an application developer, a dApp developer. Maybe you want to bring state channels to Ethereum. Under the current model, one has to do an ICO or something along those lines, issue an unnecessary token that really doesn't provide any utility above and beyond what Ether provides, but do so to raise capital in order to be able to bring this innovation to the system. Instead of having that and segregating value away from the principal token, the token holders now have a mechanism where they actually can provide funding for this dApp. And that's a really exciting proposition. The challenge, however, is that the construction of such a system is a tremendous endeavor and requires quite a bit of deep thought. First off, there has to be a proper and fair voting system. Second, there has to be incentives to vote, incentives to participate above and beyond some notion that this system is going to be a common good. There's a kind of a tragedy of commons notion there. Third, there has to be an easy way to submit ballots, but do so in a way where ballots actually, the reasonable ballots, have higher precedence and priorities over absurd ballots. And do this all in a way that's completely decentralized, and do this all in a way that is somewhat distributed and doesn't require centralized governance. So a treasury is quite hard. Dash had a first example of it, and they've had tremendous success as a project as a consequence. So at IOHK, we are quite interested in this model, and we think this is one of the single most important things about sustainability, because it's leaving something behind embedded within the system itself that allows the system to pay for its own bills. Yet, it is, as I mentioned, quite a bit of research. So we've already started the process. We first started examining the voting system, and we're looking into using a modification of liquid democracy. And then combining that with an incentivized treasury model, that we have developed with a